Welcome to the weekly update. So, what's been happening this week? Well, a lot of it is held in this one sentence, which is the 10-year yield spikes. It leads to a 90-day pause on tariffs. The president announced a 90-day pause on tariffs, but raised China's to 125%. So, why has this happened? Well, he came out with the tariffs on Monday. The idea was put out the tariffs, as he called them, reciprocal tariffs, and then that people would come, he was hoping, back to negotiate and, they negotiate from there and find their position from there. But certainly changed the way business has been done between the US and other countries around the world. That's what most countries did, but China actually came back and said, you're going to do that, we're going to raise it, we're going to put tariffs on you. Trump went higher. They went higher. Trump has now gone in with 125 days. That's just today. What happened yesterday? Well, just yesterday, US tariffs are now live worldwide. So they were to launch on the 9th, which they did. As part of Trump's executive order, Chinese goods are now facing 104 total tariff. What happened? Well, Bitcoin plunged down to 74.6 thousand after peaking at 80.8 thousand earlier in the day. Ethereum slid below 1500, and the US equities gave up early gains to close deep in the red. No market is safe right now. The fear yesterday was at 15. So what's actually been happening? Well, if you were to have left your house on Monday at around noon and headed off to a log cabin without internet, and came back today, if you checked the price before you left, it was around 82,000 for Bitcoin. And if you checked when you got back, it was around 82,000 for Bitcoin. You would have said, must have been a boring week, nothing happened there. But what actually happened was Trump announced the reciprocal tariffs, but they were much more severe than most people would have anticipated. And then the stock market, had a huge pullback, one of the biggest in its history in one day, I think the biggest. And Bitcoin also had a huge pullback from that sort of 82 level all the way down to 71.6K. Then it was announced that there was going to be a 90-day pause on that. And on that news, within 4 hours, it went from there back up to 81,000. Then when it was announced, that happened in 4 hours. Then it was announced that information wasn't true, and the market came back down over the next 24 hours, back down to the sort of 74.6K. And then finally, today, Trump announced that actually there is a 90-day moratorium on this, but China's one was actually going up to 125%. So we've had unbelievable swings in the market, whether it's the S&P, the Nasdaq, or crypto itself. So where are we right now? Well, where we're now is Howard Lutnick says negotiations are coming. The Commerce Secretary said in an interview with Fox News that trade deals with countries won't happen right away, but they are on the way. We're going to cover a lot of ground in the next 90 days. So now the plan is all the countries they put tariffs on, they've put a pause on those tariffs, depending on how the negotiations go. These countries have come to me and go, hey, we want to negotiate. We don't want these tariffs. What do we need to do? What's the negotiation? And that is now going to happen over the next 90 days. However, like I said, on China, it was, yes, we're willing to negotiate, but we're starting it 125% as the starting point, and we'll take it from there. So they're open to negotiate with everybody, including China, but everybody else's is paused except China. What happened off the back of that? Well, uncertainty. So first we had a huge uncertainty with a spike of uncertainty on the VIX. It went up to 60, which I think is the highest in its history. It since has come back from that since Trump has put a pause on these tariffs, but it's down to now around 33, which is still one of the highest points it's had in history, but obviously much, much less than 60. So a lot of uncertainty has come out of the market, but there is still uncertainty. What happened in the markets? Well, the S&P absolutely ripped up nearly 10%, Nasdaq over 12%, Bitcoin surged nearly 10%, Ethereum got back over $1,600, altcoins like Solana, XRP, and many other cryptocurrencies popped back up, but popped back up to roughly where it was last Monday. What does that mean for us? Well, there was other big news as well. Strategy, Coinbase and cryptocurrencies soared as markets rebounded following Trump's 90-day tariff relief. Pro-Bitcoin Paul Atkins is also officially confirmed as the new SEC chair, so more positive news. We see MicroStrategy went up 23%, Coinbase 18%, Bitfarms 26%. So these numbers are very big, but a lot of it is just getting back what I had lost earlier in the week. But still positive news overall. But that brings us back to this point, and where we started is where we'll finish. The 10-year yield spiked. What does that mean? Why is it relevant? And why did that lead to the pausing of the tariffs? Well, so when there's uncertainty in the market, people tend to move towards our US treasuries or bonds. The more people that are buying the bonds, the more expensive they become, like anything. But the more expensive they become means the less yield you're earning on them. So let's give a really simplified example. Imagine you bought a bond for $100,000, and on that bond, it's going to pay out 50 grand per year while you hold the bond. In that example, that's 5%. Now, let's say there's huge uncertainty. Loads of people are going in and buy the bonds, and now the bonds are the same bond, but it's now 200,000. Now you've paid 200,000 for the bond, but that means while the price of the bond is going up, your percentage yield is going down. You're still getting 50 grand per year for the same bond, but that now only equates to 2.5% on what you pay for it versus 5. So obviously, the more demand there is for the bonds, the cheaper the rate that's being paid on the bonds. And who's paying the rate? The government. So the government like to see, in general terms, demand for their bonds. Many people believe the reason Trump is creating such uncertainty in the market on purpose is to have people move from the stock market towards the treasury, buy up lots of treasuries, which means for the amount of money they're bringing in, the percentage they have to pay is less. And they have stated they're trying to bring this down. In times of huge uncertainty, usually there's big buying and therefore that percentage becomes lower. However, while all this was happening, the exact opposite happened and the percentage rate was increasing, which would suggest there was selling. What is going on? This makes no sense. In huge uncertainty, how could there be net selling of these bonds? And here's the theory. We look to China. China internal economy is not good. It's heavily dependent on the property market, and their property market in the last 2-3 years has capitulated. Some of their biggest companies, the likes of Evergrande and others, have gone bust for hundreds of billions of dollars. So internal economy is not strong. However, they have a very strong export economy. Except now, one of the biggest countries they export to, the US, have just put 120% tariffs on their exports. China's in a bind. They have nowhere to go except come and negotiate with Trump. Or do they? They are one of the biggest, between themselves and Japan, are the biggest holders of US treasuries. They've stopped buying them for quite a number of years, but they're still the biggest holders. Is it possible that the Chinese have been dumping the treasuries on purpose, knowing this will increase the percentage on the bonds in America, knowing that Trump is trying to get those down because America have $9 trillion in debt that has to be refinanced this year? So if this is all happening, what's Trump going to do about it? At the moment, if that's what's happening, despite creating that uncertainty in the market, the bonds aren't being bought, or maybe they are being bought by people in uncertainty, but China are selling more than what's being bought, driving the price of them up, and therefore the price of them down, therefore the percentage being paid for the amount of money raised up, which is the exact opposite to what the government want. So is it possible in the negotiations that we see for the next 90 days that not only will Trump be discussing with these countries about, the tariffs that they have on US goods and bringing those down close to zero on both sides, that he also puts in a clause that they have to buy a certain number of US treasuries to offset what the Chinese might be selling and more, therefore driving the price or the percentage being paid by the money raised down, which they want in order to sell and refinance $9 trillion worth of debt over the rest of this year. It's an interesting space. It's certainly chess that's been played and not drafts. Trump so far appears to be getting a lot of it right, but it's massive uncertainty. Some of the uncertainty has been taken out of the equation. Much of it still remains, and of course the clock has started ticking. What's going to happen between here and the next 90 days? Are they going to get the deals done? As they get deals done, will they announce, this country, we've done this country, we've done that, over the, randomly over the next number of weeks and months? Or will they hold it all for the end and say, I think what's going to happen is, with every deal they get done, they're going to put it out there, this deal is done with this country, this deal is done with this country, in order to put more and more pressure on the Chinese. Because if they see that the US are doing deals with every country in the world and China's being left out, that's massive risk for them. Having said all that, I think they're going to stubborn it out for as long as they can. This all adds to uncertainty. The uncertainty is there now. I think the market is taking a sigh of relief after what's gone on for this week. I think next week we start seeing them trying to price in that uncertainty, which is almost immeasurable. But I still think, because of all this, I don't think we see Bitcoin taking off from here. I think we have sideways action. I think that's going to give us more opportunity for the altcoins to pull back even further and give some options of a lifetime to get into really good projects at really discounted prices before all of the dust settles on this and we take off for the biggest run we've ever seen. Make sure that if you follow that as a thesis, and it is my base case, make sure you're looking at the projects that we're putting a spotlight on. There's already 10 out there. There's many more to come. We're spotlighting the very best projects out there, doing the research, giving you a full report for you to look through and see if it also fits in your portfolio. So watch out for that. Hopefully you found this useful. We'll talk to you all very soon.